Hey there, credit enthusiasts! Welcome back to our channel, where we discuss all things credit related. In today's video, we're going to share some light on an important topic: the top 7 reasons why Navy Federal might deny your application. Navy Federal is a fantastic bank with a wide range of products, but there are a few factors that could raise red flags and impact your chances of approval. If you haven't subscribed yet, make sure to hit that button and turn on the notification bell to stay updated on our future videos. And if you're interested in learning more about the Navy Federal Credit Union, feel free to check out our Navy Federal playlist in the link provided in the description below. Let's jump right into it. The length of your residence. Your current place of residence, be it a house, apartment, or any other dwelling, can play a significant role in the approval process. Imagine this scenario. You've been living at one address for 6 or 8 months, and then you decide to move to a new location. Naturally, you have to update all your personal information, such as your credit cards, with your new address. Now, when you apply for Navy Federal's products, they'll notice your recent move. The credit bureaus receive notifications when you update your address, and this information is visible to Navy Federal. While it's true that people move frequently for various reasons, the bank might perceive multiple recent moves as a red flag. They could question your stability or assume you're going through some hardship. It's essential to keep this in mind when applying for Navy Federal's products. Multiple addresses on your credit report. Now, this reason is somewhat related to the first one. If you pull up your credit report and find a long list of addresses, it could raise concerns and impact your application. Having 5, 6, 7, or even 10 different addresses reported within the past 10 years might make you appear unstable to Navy Federal. Remember, stability is crucial when it comes to financial institutions evaluating your creditworthiness. It's a good idea to clean up your credit report by contacting the 3 major credit bureaus and ensuring that only one address is reporting. This way, you present a more consistent and reliable profile to potential lenders. Bankruptcies and past debts owed to Navy Federal. If you've had a bankruptcy in the past or owe Navy Federal money, such as unpaid credit card balances, it can significantly impact your chances of approval. Even if you paid off the debt or years have passed since your membership with Navy Federal, they might still deny your application based on these factors. It's important to understand that Navy Federal views these situations as red flags. They want to minimize the risk of extending credit to individuals who might default again. So, before applying, make sure you've resolved any outstanding debts with the bank and consider discussing your specific situation with a representative to get a clearer picture of your eligibility. Lack of credit diversity and activity. This reason applies to not only Navy Federal but also most other banks. They want to see that you've successfully managed various types of credit in the past. Having a thick credit profile with diverse accounts is often preferred over a thin profile with a high credit score. Let's say you walk into a bank with a stellar 750 credit score but a credit profile that consists of only 1 credit card and 3 other accounts, such as a cell phone or utility bill. While a good credit score is a positive factor, the lack of credit diversity might raise concerns. Lenders want to see that you've responsibly handled different types of credit, such as personal loans, credit cards, auto loans, and perhaps even a mortgage. By showcasing responsible credit usage across multiple accounts, you significantly improve your chances of approval. Income that is insufficient or new for additional credit. You may get denied because your income doesn't qualify you enough to make the monthly payments based on your overall debt to income. Having enough income is standard for every credit account application. Income will determine your credit limits and how much you can get approved for. Some credit applications will also require a certain income threshold for you to even get approved. You want to make sure your income can afford more credit. Navy Federal wants to verify that you can make your monthly payments, and this also coincides with your debt to income. If you are wanting to obtain a high credit limit credit card, or a $60,000 auto loan, or even a $20,000 personal loan with Navy Federal, your income has to support those numbers. The easiest way for you to fix this denial is by adding more income to your credit application. Adding your entire household income, starting a business, or even picking up a part-time job can remove this reason for denial. More income means more available credit to you. Having a high interest rate application. This can be having a high interest rate on a credit card, auto loan, or personal loan. The reason why Navy Federal denies based on a high interest rate application is that you are more likely to default on that credit account. When you are making payments on a high interest rate credit account, most of the time, your payments are going straight to interest. So you may notice that your balance on the credit account is no longer decreasing but instead increasing. No matter how much you are paying into it, you may be surprised how common people default on their credit accounts because of high interest rates. And Navy Federal doesn't want to take on that risk. Navy Federal would rather deny you based on your high interest rate application than approve it. So, if possible, you may want to contact your creditors and ask for an interest rate reduction on any of your credit accounts that you are paying on. If you are making payments on any of Navy Federal's credit cards, Navy Federal will allow a reduction at a soft pull when your credit card has reached at least 1 year. By reducing your interest rate on a credit account, you are less likely to receive a denial for having a high interest rate application. Not having enough debt. As crazy as this sounds, Navy Federal likes to see that you have enough debt reporting to the credit bureaus. It's ideal for Navy Federal to see that you have personal loans, auto loans, or credit cards with debt reporting to the credit bureaus. How will Navy Federal determine if you will pay them back or if they will make money loaning you credit? For example, every time you swipe your Navy Federal credit card, Navy Federal is receiving anywhere from 1.3% to 3.5% of each credit card transaction in processing fees. So, if you don't have any debt, you are seen as a higher risk because they don't know how your spending habits are and won't be able to make money off you. This is a two-way transaction. They loan you credit, and they make money off of you, whether it's in the form of interest or processing fees. Having enough debt reporting to the credit bureaus will eliminate your risk of being denied a Navy Federal credit application. In conclusion, these are the top 7 red flags to be aware of when applying for Navy Federal's products. Pay attention to the length of your residence and try to maintain stability. Minimize the number of addresses reported on your credit report and ensure it reflects your current and most consistent address. Resolve any past debts or bankruptcies before applying. Finally, diversify your credit profile and show that you've handled different types of credit responsibly. Remember, Navy Federal offers excellent products, and it's worth addressing these red flags to improve your chances of approval. That wraps up today's video. We hope you found this information valuable and gained insights into the potential red flags that might affect your Navy Federal application. If you have any questions or personal experiences you'd like to share, please leave a comment below. And don't forget to subscribe to our channel for more credit-related content. Until next time, take care and stay financially savvy.